Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. Talking energy, let's talk crude oil today. We got a midday rally that extended in toward the end of the day. We started off with crude a little bit lower. There's been some comments about the acceleration of Venezuela's decline not really affecting overall production, but we started lower this morning. And we had a strong midday rally with crude going below 59 in the early session and then above 61 later in the day. So that's a pretty strong rally. Part of what may be adding to the bullish sentiment for today in crude oil is gasoline inventories in yesterday's EIA number. We still don't have refinery throughputs, or refinery output as most people would call it, back to 95% where it was pre-hurricane levels, but that's not necessarily a factor of any damage remaining in the refineries. What we have right now is a decline in the supplies of gasoline year over year, but an increase in the EIA yesterday. We had a 3.6 million barrel increase in the EIA from February 2nd to February 9th. That weekly report, again, an increase of 3.6 million barrels, but year over year, we're down 9.9 million barrels from last year. That's a 3.8% decline. So if refineries don't start ramping up production, they may fall short of having enough gasoline for the summer driving season. I mentioned before, we're in a strong seasonal period starting over the last few days. Crude oil generally rallies all the way through to mid-June with only a couple of pauses on the way up. So you're probably going to see refinery outputs, or throughputs as they're called in the industry, start to increase. And again, gasoline inventories are a little low for that to happen right now. Also adding to a little bit of the late day bullish sentiment is the dollar seems to be rolling over. We're testing lows now. You can call this a triple bottom on a daily chart. We had 88.43, 88.55 and a half, and today we got down to about 88.58 before pulling or rallying back a little bit toward the end of the day. Now that is not the exact same price level, but it's close enough to call it a forming triple bottom, and triple bottoms tend to be continuation patterns. In other words, the fourth time down, they tend to break. So the dollar has been in a little bit of a pattern of weakness about the last 5 or 6 days in a row in the dollar index, and tremendous weakness against the yen as that continues to rally. We'll probably get some comments out of the BOJ, which might cause that to pause because the Bank of Japan doesn't like the strength in the yen right now. But overall, the dollar's weak, adding a bit to all commodities, which includes crude oil. This is Bob Iaccino talking crude oil futures from the CME Group trading floor in Chicago.